Okay, folks. Belt away. Any questions on what the trades we're doing or anything like that?
Just noticed the spread was quite wide in that EOG yesterday, like, so you couldn't kind of do it.
Brilliant. Fair play to you, Michael. Yeah, absolutely. And I suppose when I was looking at it, I was looking at the option chains in pre-market, but we went to actually go and place it. The spread was extremely wide, you know?
Yeah, there was nearly $1 wide on it at the time.
Yeah. So that's the problem. It's the same with Katera Energy, and it actually depends a lot on your expiry dates. The closer you get to expiry, you tend to see the spreads narrow quite a lot because they seem to be more actively traded, you know. But one gauge you can use here, Michael. So if we went out to January, for example, here, you can look at, let's say, the open interest, and you can see there that, you know, that's the amount of, can kind of give you a gauge of how many people are actually involved in trading the calls at these strikes, you know. And you can see at different levels what they actually are. And you'll find that closer to the money or closer to where they usually trade at, you can see the volumes are much greater. And you'll find around there, actually, the bid-ask spread will be narrower, you know?
Yeah, saw that, yeah.
Yeah, and it was the same for Katera Energy, by the way.
Hadn't looked at it. I didn't look at that one, actually.
Yeah. Yeah, no, good spot there, Michael. Fair play to you. Any thoughts or questions on the SPY trade?
I missed it, like, but you couldn't get on it, like the premiums disappeared out of it rather fast.
Yeah, they actually, when I put that on, Michael, would you believe it? I got in $500, and by the time actually I finished about an hour later, it was up at 600, and then it dropped. It really kind of, but the pre-market is down today, Michael, so you might get a chance today.
Mm-hmm. I got in your 620 there a week ago or whatever at 520.
Oh, good. So you're making a few bob on that.
Oh yeah, that one's going well.
Yeah, very good.
Should you actually close that down at this point? No.
It depends what's left on it. What expiry?
I think it was 29th, was it? I think.
The 29th you picked, was it?
I think it was, yeah, for that.
Okay, the 29th of November.
29th of October.
Oh, October.
No, it's 14th of November. Sorry, I'm thinking of the wrong trade.
Oh yeah. I would look. It depends what's the value. So that's actually a brilliant question, right? And I'm going to explain why it is. This comes back to kind of who you are as a trader. So, for example, using the short put strategy, you can use it in a number of different ways. First way is, look, I want to buy this stock, and I'm just looking here before I go on. That doesn't sound good. My God, maybe I should pull that screen off. 6666, all the sixes. But anyway, just the first thing on using the short put strategy, you want to actually take assignment. So in that scenario, the answer to your question is no. If you wanted to get the shares, no. The second one is then, are you an active trader, option trader? And active option traders tend to look, when I get into 50% of my max profits, I'm going to walk away and just take my profit off the table. So for example, Michael, if you got 4 in on this initially, it's now at 172, you'd be closing down the trade and saying, I've got 50% of my max profit. The way I operate on SPY, and it's just my opinion on it, I tend to leave them run and just take in the premium unless the premium disintegrates so quickly and I think it's going to pull back again. Then I might just close it out, you know. But for me, I'm looking at that. There's another $172 of premium left in that. Mm-hmm. And then you go into that trade now, for example, your probability is probably 99% or something, like it's 98%. So for me, you know, where are you going to get a 98% chance of making $170 in the next 14 days or 21 days, whatever it is, you know.
Mhm.
So I hope that answers your question, Michael.
It does actually, and maybe shortly after that trade went on, maybe it should have been closed down because the premiums went out of it, like, and it dropped nearly to 50%. So maybe within the 2 days of putting it on, it should have been taken off, and you know, there was an opportunity then to re-enter.
Yeah, yeah, absolutely. Yeah. No, thanks for that, Michael. Any other questions? Any other questions on SPY?
No, I'm good.
Okay. So just thought I'd kind of talk people through here, just in case when you're in your positions, if you actually click on the position, people might use this. It's telling you what your current probability is, right? But just a couple of things about this performance details area here. Do you see the break even here on that trade? It's actually basing it off if you had placed the trade at the current price. So, and the probability is on the current price. It's not on when you actually place the trade, just to clarify that for people. Some people might be going, oh, I took in 6 last night. How come my break even is only 635? It should be 634. The answer is that that's just based off the current premium that's on offer for that contract. So I hope that makes sense. And all these Greeks here are telling you, you know, the theta value here, for example, is telling you the value of that option's eroding at $17 a day, roughly. You know, which is great. That's why we sell put options. It's for that theta decay. That's what we're benefiting from, you know. And so it's a handy little feature there. So just on crude oil, I don't know if you've seen crude oil. I'll go to the charts here. Like it's up 5% today. So I don't know if you've seen my video earlier, but just the 3 reasons why crude oil are up. First one, US are adding to their strategic reserve about 1 million barrels. Number 2, Russia and US aren't meeting at the moment, at least. And then number 3, sanctions have been imposed on 2 of the biggest exporters of oil from Russia, from the US. And also Donald Trump has threatened the countries that buy oil from them as well. And it looks like India have already committed to reducing their purchases of oil from Russia. So obviously that's very supportive of oil prices if the oil that's on the market from Russia starts to come off the market, you know. So that's why oil prices have jumped. So look, we were out of our oil trade. I don't plan on jumping back into it. I just want to see, you know, we've kind of seen this picture before, you know, where you've seen something like that. So I want to see that we actually kind of come back down a little bit, and then I would certainly put on the 55 put again, short put, or the $50 short put again, you know. So yeah, a big jump in oil prices today. So for those of you who are in USO who went the other way and did it in their pensions for the longer term, you're going quite well, and it could probably increase further over time. I'd say we're eventually going to migrate back to the $70 mark, you know. So like our reasoning for this with oil, I just want to go back, was we couldn't anticipate the US were going to slap sanctions on Russia for oil. So for example, that wasn't our reason. Our reasoning was it didn't make financial sense for a lot of producers of oil at $55 a barrel to keep producing it. They're losing money. Not everyone is losing money, but a lot of players are losing money. So therefore, like natural gas, you would expect that they turn off the taps for a while, and the supply gets reduced. Therefore, the price stabilizes and goes back up. That was really the rationale. And then secondly, I suppose oil prices are reflective at the moment, or we're starting to reflect maybe peace in the Middle East, peace and potentially in Russia and the Ukraine. And I think a lot of that was already priced in, plus I suppose China kind of still struggling economically wise as well. So a lot of negativity priced into oil prices. Now it could have went lower, is what I will say. If there was a peace agreement between the Ukraine and Russia, I think the short-term impact would have been a decrease in oil prices. So you need to be aware of that as well. If that ever news did ever come, that's really what's going to come at you. You're going to see a kind of a sharp drop off in oil prices, So kind of that's my assessment of oil, guys. I wouldn't chase it now. I would wait. Let's see does it give back some of these gains over the next few days, and then we put that short put on again. Any questions on oil?
Many futures on that, the MCL.
Yeah.
I just had a quick look before the meeting there, like, and it had jumped. Was it 290, I think, or something? So that would mean that your put it have gone up nearly by what, 70 cents. The delta on that, I think, at the time was 70 cents, isn't it?
On the short put?
On the call.
Oh, on the call.
Yeah.
Oh, okay. Oh, the call. Yeah, the call will have jumped up in value big time.
Yeah.
Yeah. Yeah, and it's the different ways. Like about what I think it was 3 or 4 days ago, we put out a video on buying call options on when it was starting to get down to 55. That's where I was saying to people, I'm going to switch to buying calls here, because I think it's going to go up. But and you could have financed that with a short put as well if you didn't want to pay for all of it. So you're dead right. When the share price increases, right, delta increases too, and delta increases by the gamma amount. So just so you know the relationship between the two here, okay? So gamma is the rate of increase of delta for a $1 move in the underlying share price. So delta is never static. It's always changing as the share price is changing. Okay, so the other thing I spoke about today was, I suppose, oil, the metals, gold and silver. And I'd spoken about last week, that if we felt the market turmoil was going to be short-lived, with this spike, do you see the way oil kind of spiked? And just to put this into perspective, I keep saying oil, sorry, gold. That's, if you look at that in perspective, I have to move it over here to get it. That's a 9% increase in, like, what, 5 or 6 days. It was just jumping exponentially day after day. So my view was some of those gains are going to be given up. And look what's happened. They've given up all of those in the space of 2 days. My fear is at the minute that gold has created a lower low yesterday. Okay, today we're up, right? But it's early days yet. This could still reverse course down here. So right now, I'm not a fan of gold, right? But in my opinion, if gold did retreat, another 10% is where I'd want it to retreat to. That's just me, okay? I know everybody has a different opinion on this. If gold retreated 10%, I would actually consider going long on gold then. And again, my rationale from that, again, is supply and demand. We know that central banks have been buying up gold reserves for the last number of years now. So the supply is reduced. And for me, uncertainty, in times of uncertainty, gold is the go-to. So at least there's going to be a retest of this high, in my view. But I don't think it's worth the risk at these levels. That's my own opinion. If I was a holder of gold, would I sell it? No. Okay. And it's an exact same story here for silver. Exact same thing. Okay. So they're the 3 things I wanted to cover off today, guys, in terms of, just option trades and active trade or option trades. In terms of our short-term stock trades, we're kind of up on all of them bar Alaska, but Alaska has earnings out today, I believe, and their earnings must be good, or is it after? It's after hours. They're up pre-market by 2%. But Southwest Airlines jumped 5% yesterday, so I was kind of a little bit surprised by Alaska going down. Southwest Airlines had good earnings out yesterday. They jumped in the pre-market and then finished down. Whatever they read into the announcement afterwards, the conference, they didn't like, but initially it was up. but their earnings beat expectations and everything else like that. So let's see what Alaska brings later on tonight. So earnings tonight for Alaska. Flutter is, I like it's consolidated here now. If we break above 19,000, I would say, and trade, I think we just march higher to 20,000 very, very quickly. So we're going to stick with Flutter. MGM is up pre-market again, so that's nice. We're going to stick with that till 35. And Domino's, we're not far away from our target of 429. We're up about 4% on this trade. I suppose we're trying to get the last bit out of it up at 429, and then we're going to exit up there. So they're the four of those active stock trades. We're going to stick with the four of them. In terms of adding more, not a huge fan of adding too much just at the moment on the active stock trade side of things. I don't like having too many positions on the go, especially when we're getting the market the way it's going at the minute, jumping up and down a bit, So I'd like to see how things shake out over the next few days and maybe exit a couple of positions before we add more to.
Just on Southwest, I heard just a brief announcement that we're going to go back to seat allocation again.
Southwest Airlines?
Yeah.
Okay. So that's maybe why they kind of fell off. So, maybe.
Yeah.
Yeah, they're going to charge for it,
I don't know. I just heard that's the only brief I got of it, was that it's going to refer back to seat allocation.
All right.
They don't have at the moment.
So that's good. Thanks for that, Michael. So that could explain maybe one of the reasons why the share price started to drop a little bit, So they're kind of the things I wanted to cover off. Is there any questions there, guys, about maybe option strategies, future strategies, anything you need clarification on, or any stocks you want me to have a look at? No, we're all good. Okay.
I'm just looking there. Sorry, did you mention Domino's and GoDaddy?
Yeah, Domino's, we're going to stick with it till 429, Richard.
Yeah, I saw that. Yeah.
So we're going to stick with that one, and then GoDaddy. We haven't got into GoDaddy ourselves, but I love this set up here with GoDaddy. I think it's probably going to migrate back here to that 50-day moving average at 140 at some stage, So if you're in it, I wouldn't be exiting it myself, no.
Sure. That's it for me. Thanks, Stephen.
No problem, Richard.
Cheers.
Thanks, Stephen. Thanks.
Okay, guys, I'm going to leave it there. As per usual, if you have any questions or need any assistance, don't hesitate to reach out. Okay.
Sorry, Stephen, can you hear me? It's Stephen Gavin.
Yeah, go ahead, Stephen.
Are you gone? No, you're there.
Oh.
Just quickly, I was just thinking, in terms of industries, have you ever looked into banking? Is there anything going on there? I know you told me, you warned me off the Irish banks, and the luxury sector, your Pradas, your LVMH, they seem to be pulling out of a bit of a rut. I was wondering, has it featured at all in your research as of late?
So they came up. So if you actually looked at equity scan, a lot of these stocks, would you believe it? Obviously, they were showing great value down here, but they're not showing such great value anymore. So there's your Louis Vuitton there, Stephen. So it's a great observation. So literally, if the equity scan tool here, if you'd have gone and sorted here by potential upside, for example, right, you would have seen all the luxury players in here at one stage when you looked at potential price increase, and you can see there's another one, Puig brands. You can see, surely they're slipping off.
I wasn't sure whether if they reached the bottom yet or not. With all the potential upside, fair enough, they were in a slump. I suppose that's the nature of the game. But
it's just so hard, Stephen. It's so hard with tariffs and the unknown with any degree of certainty to invest into any of these guys, And that's just my opinion on it, That's why you're seeing the majority of retail down,
And in terms of just what I'm looking at there, you've LVMH there with 14-day RSI well above 70. What's it up at 73, 74 nearly?
Yeah.
Is there opportunities there? I mean, I can't remember what the analyst share price was or the equity scan share price target was. So that maybe if you have it there, just out of curiosity.
Yeah, like I wouldn't be a buyer here. Like we're showing, our valuation models are showing like a 7% decrease.
Down. Yeah. Okay.
So it's from a valuation perspective, no. Would I short stock? No. You know,
It's very expensive now, isn't it?
yeah, like I mean, if you were going to short this, you might use like a bear put spread or just buy a put, you know, something like that. But like that's a huge move. Like that's July of this year. It's at 480. It's now at what, 640. You know, it's a massive, massive move. These were all, by the way, in equity scan. They were all saying, buy me, you know, but it's very hard to buy when you've no idea what the rules of the game are, you know.
There you go.
It's tough going, like, you know. So for me, I think I still much prefer trading indexes and stuff like that, and just actively short kind of the stocks, short-term trading, with some exceptions. You know, when you get the likes of Adobe, you know, it's had a bit of a rally since, but like you can see there now, this is just kind of trending sideways at the moment, you know. You get some stocks that get down and offer great value. Amazon is coming back down. Their earnings are going to be very interesting, actually, to see. You know, don't forget they're under threat from on the retail side from the likes of Temu and all those guys. And it's going to be very interesting to see what they have to say, you know.
Okay, dogs. Banking, finance. I mean, it doesn't seem to.
No, it's already done. We were buying Citigroup and all ages ago. You know,
that was a long time back, yeah.
Yeah, and like before this was happening, we were saying buy financials. I wouldn't be buying them now. Just think about what's potentially going to happen. Interest rates are potentially going to get cut.
Come down, yeah.
So that's the net interest margin, which is the lifeblood of banks, is going to be eroded. So is it, you know, we're talking now, investment banks are different, do you know what I mean? But it's still an important part of it. So look, for me, no, I wouldn't be a fan. Not at these levels. They're very, very pricey.
Thank you very, very much.
No problem. Richard, did I see you raise your hand there? Or
yeah, actually, it was just a comment. I've been just listening to the C. So you probably know Figma is like a design platform. Yeah. They only actually went IPO'd there recently. But anyway, I'm not suggesting anyone buy them. But what is interesting is that he was saying, and others, that Adobe subscriptions are down massively in the last 2 years, I think, because of AI and obviously, you know, Google Nano Banana and these image generation things. And if you go into Figma, for example, now, there were tools that Adobe brought out 18 months ago or so, and they were AI powered, and people thought it was amazing that you could tell the image, you know, pick up an image and say, well, change the background, change the colors and such like that, just by talking to it. And that gave Adobe a temporary boost. But then with all these new tools now, they're far more powerful and about 5 times cheaper. You know, you can buy a Google subscription for whatever, 25 quid a month. And a lot of analysts think that unless Adobe do something magical very soon, they're in serious trouble. That's the kind of consensus from just reading, listening to people, because the AI people are doing what they can do in much faster.
You're absolutely right, Richard. 100% correct on that. But the analyst community are actually split on it, and they're saying that the enterprise version of the Adobe AI is gaining traction. So it can depend on what analysts you read. So there's certainly a risk with this. And personally, myself as a user of Google, why I'm a big fan of staying with Google, they just keep adding. It's nearly like on a monthly basis now. You're getting more and more features with the business suite, and like people with Google, for example, or Alphabet, let's call it, they just think it's an advertising platform, which obviously that's its core revenue, but their services revenue is increasing all the time. And what they're providing is like a one-stop shop. The only thing, in my opinion, for me as a small business owner, Google are missing is like a CRM system. And they were rumored to be buying HubSpot. And I think that would be a brilliant acquisition, just for me personally, just as a business user. And now I'm hooked on, I love it. I love the business suite and everything like that. So I'd agree with you. I don't disagree. And what you can do now, even generate an image in Gemini, which is Google's version of AI, you can literally just say to it, create an image for me that depicts the stock market going up with my logo on it and, you know, a bull. And literally in 2 seconds, you have an image. It's unbelievable.
Yeah, and there's actually, have a look at Gamma, guys. That's unreal as well. There's a I think it's Google powered in the background, but it's called Gamma.ai, and you can literally give it an idea and tell it to design, you know, a website, or like what I've used it for is an investor presentation where you can say the style, so like McKinsey style or formal or modern, whatever, and it'll produce PowerPoint presentations that, you know, you'd pay a designer a fair bit of money to design, and it's incredible. Like they actually work and they look really good, and the quality of information is high. So
What was that name again?
Astounding. Gamma, Gamma, Gamma.
Gamma, yeah. Okay.
Yeah, I think it's just Gamma.ai, but if you just look up Gamma app, and you know, it's really worth a look.
I this is what I keep saying to people. My view with AI, you know, like there's two schools of thought out there at the moment, folks. One is that the companies have overinvested and they need to start seeing a return on investment now. So that depends on what company you're talking about. And they could be right. So remember when Meta was absolutely slaughtered before for investing too heavily in the metaverse. So that conversation is starting to build again about AI, just to be aware of that. That, you know what, where's the return on investment for all of this? But I just think going forward, what this is actually going to lead to is just rapid change. That's my own best guess, and especially with quantum computing coming down the tracks too, that the rate of change in technology and how we do things in the world is going to be so fast that there's the next $1 trillion stock is probably in an incubator somewhere at the moment, and we don't even know about it, you know. And I think that's probably the way it's all going to evolve, you know. Yeah, it's I have to say it's made, you know, you would fear for job losses though with AI. You know, you could see a situation. I know there's already pilot testing of, you know, virtual telesales agents, and you know, if you think about it, if you train AI up once to answer every potential outcome of a question, you know what, you don't have to go through all of that as a company, the hassle of trying to train up an employee again all over again to objections and everything else that comes. You know, somebody was telling me literally they're trialing it right now in their company, a virtual telesales agent. So literally it's like any question, anything, any solution can be found through this AI agent, and they reckon it's brilliant because they only have to train it once, you know.
Yeah, actually, Stephen, when I worked with Fiserv, that company, you know, we've been looking at recently, it was a couple of years back, but they had a team in New York who were already testing using AI, and that was 4 years ago, to handle, you know, they do credit card transaction sort of intermediary stuff, and there's always queries from people, you know, looking for refunds. They're saying, I didn't actually buy that thing online or whatever. It's a lot of it's a scam, but they or the people are just looking for freebies. But what they realized that it was something like £53, you know, for Lloyd's Bank at the time to deal with a credit card query or a payment query, and so they reinvested a ton of money, about 350 million when I was there, into new projects. And one of them was using AI to route people to the right information, all from internal systems like Salesforce and so on. Now, at the time, it was very manual, but they were able to, I think they got rid of 61% of all, in-person phone calls simply by using this routing system to get people to the right answer. So get them off the phone or get them off the close. Put it a better way, close their ticket faster. So absolutely, I think all of those customer services jobs will, next year or two, I think most of them will be gone except the very specialist ones, to be honest.
Yeah, I don't disagree with you, Richard. I don't disagree with you. I think it's going to happen. The challenge, if you look at multinationals, they used to outsource customer service to India or whatever else, and then they had to bring it back in-house because they realized the quality wasn't there, and it was just customers didn't like it. And certainly the friends I've spoken to, it was brought back in, and now you can see it being farmed back out, but this time to AI. It's certainly, it's happening. It's only, and it's hard for us to kind of feel the future as such, but it's happening right before our eyes. And I work with Trinity College at times on collaboration and potential collaboration, and we were working on an options platform project together, and they were introducing me to the quantum computing, and guys, that's just a whole different ball game altogether. And they're saying like AI is just, it's only the start. It's only like a drop in the ocean. It's a little bit like having a website in 1999, or whatever. It's just the start of something that's much, much bigger that's coming down the line, and it can be quite scary too, from the way that what they're afraid of, or what people are afraid of in the future with quantum computing, is the power that they have to solve problems so quickly, and the worry encryption is a big risk. So everything you think is safe and secure now, like banking, even sending a WhatsApp message, your passwords, everything, they're concerned about all of that down the line.
Yeah,
It's nearly impossible now to speak to somebody on a call center.
Yeah, it is. That's what they want, Michael. That's what they want.
Well, I can tell you one thing. Years ago, I had the pleasure of speaking, or the unpleasure of speaking to people from a certain telecoms company in Ireland, and I didn't want to. I'd be glad to talk to a computer over them, because they wouldn't solve my problem. And so it's amazing how I think things have shifted to get to an answer quickly. I think most companies realize people are time precious, and answer the specific question. And look, it's here, and it's here to stay. So with that in mind, a trade I was starting to line up was, would you believe it now, and you probably think I'm insane, is actually shorting NVIDIA. Not from an out-and-out short. So first of all, I will never short a stock outright. But my view is AMD, and there is evidence that other providers are starting to gain inroads and traction. And for me, maybe the valuation multiples of NVIDIA might be at risk. Now, not this side of Christmas. I think the Santa Claus rally builds the market up, genuinely speaking. But I do think the likes of NVIDIA might be at risk from a valuation multiple reset. And if that does happen, you could see this come back down to 150. So I've started to look up, put options on NVIDIA. Not ready to do it yet. I'd love it to see it take out its previous high, etc., like that, and then maybe apply it. So it's just something personally myself. It's like one of these punt trades where you're going against the grain, and you're saying, look, this. If you think about it, everybody wants in an NVIDIA. So when the time comes that it's not flavor of the month anymore, there'll be a lot of people trying to get out. And when that happens, the downside will be fast and furious. And that's what I'll be betting on. And basically, it's a bet, guys. That's all it is. It's a roll the dice. You wouldn't put a lot on it. But I'm starting to look at that. and I wouldn't consider it until January, but it's just something I'm lining up myself. Primarily because if you look at what's happened to AMD, this is a stock, I don't know if you remember, 2 years ago I said I think this would be worth having a look at. Look what's happened to AMD. As they're getting more and more deals over the line and collaborations with companies like Oracle, etc., like that. So I think these guys could start eating into Nvidia's lunch. You know, just thought. So yeah, we kind of discussed a lot today, guys. Just wanted to circle back to oil. Just one thing to consider: if you think this is the start of oil making its way back to $70, and you are looking at stocks to invest into, maybe oil stocks, you know, just look at the likes of them. Like the majority of them are on the floor. Here's EOG, for example. Look at the share price. I could go through loads here. Halliburton, like they're all down. Doterra Energy, every single one of them. So if you're looking for stock ideas now, in my opinion, and you think oil prices are going to continue to rise, I wouldn't look much further past energy stocks, you know. But make sure you're picking quality energy stocks. You know, you don't want to be picking ones where the balance sheet is not good, you know. So Doterra Energy and the likes of, you could start looking at their Schlumberger stocks like that, you know.
Thanks, Stephen.
No problem at
very
all.
much.
Thank you.
Okay, guys, I'm going to leave it there.
Great.
Reach out if you have any questions. Okay.
Will
Thanks.
do.
See you
Thanks
then.
again. Cheers, Stephen. See you, lads.
All the
Bye
best.
bye.
Bye bye. Bye bye.